Ladies and gentlemen, Greg McCloskey from ForexLive.com. I'm going to do a Forex quick look at two of the major currency pairs, the Aussie versus US dollar and the New Zealand versus US dollar. Today's date is May 9th. Let's get started. I'm going to focus on the 4-hour chart of the Aussie versus US dollar. And what we saw in trading this week was a move to the downside. This was a Monday. That's a dash line right here. Actually, the move to the upside was initially taking the price up to this swing area. The swing area was defined by a number of different swing highs. You can see the ceiling being developed through here. Yes, the price moved above the ceiling on this day right here, but it was short-lived. This whole thing was started right here, where it initially was a floor before we moved down below that level and started to use that level as a ceiling. So we had one failed break up here, and then we developed this ceiling, and lo and behold, the high price on Monday's trade came up to into that swing area, as it did on Friday of last week, and found willing sellers against that level, forcing the price to the downside. Now, the low price that we did reach came down to the broken 38.2% retracement of this move to the downside. As most people know, I like to see the 38.2% retracement broken and stay broken after a trend-like move. And so the holding of this 38.2%, which is somewhat significant, we started to rotate back to the upside and trade here today. We're seeing the US dollar get weaker after the initial jobless claims came in weaker than expected. And that has forced the price back to the upside. And in the process, we moved above this blue line. This blue line represents the 100-day moving average. I should say moved above and stayed above. We did have some. We did trade above and below it over the last yesterday and into today. But now moving away from that level, and that 100-day moving average is now going to be a key support. As long as the price can remain above that level, the bias remains more to the upside. The next target being the 50% midpoint, once again, of this move to the downside. If the price can get above that level, 0.66159, it opens up the door for another move / test of this key ceiling area between 0.6635 and 0.6644. Be aware, be prepared, but buyers are trying to make a play, get above the 50%. We'll see what happens after that. Looking at the New Zealand versus US dollar, I'm looking at the 4-hour chart. If we take a look at this move to the downside here, the price in trading here today did bottom right near the 38.2% retracement. Admittedly, the price moved below that level in trading yesterday, but we did find support near the low from, or a high price from last week's trading. That high price came in around the 0.5983 level, and as you can see, the price moved a little bit below that level, but then rotated back to the upside, getting above the 38.2, and in trading here today, support held against that 38.2% retracement. That was key, in addition to the initial jobless claims, to help push the price back to the upside. Now, what next? Well, you see this swing area. The swing area is defined by different swing lows through here before we broke below that level and started to use that level as resistance. Admittedly, it got a little wonky through here with breaks above the swing area here and here. And we tried to stay above that level here, but then when we fell back below the level through here, the price rotated to the downside. It wasn't until trading last week where the price of the U.S. jobs report moved above this swing area and also above the 200-day moving average briefly, but could not sustain that momentum. And then in this week's trading, we started to use that area as resistance once again, including today where the price just moved up to the low of the swing area between 0.60234 and 0.60337. Also in play, of course, is the 200-day moving average. That's the green line in this chart. So this whole area right through here is now our key target on the top side, that if we get through and stay through that level, we start to look toward the 61.8% retracement of the same move to the downside right through here. So buyers are making a play in both the Aussie versus US dollar and the New Zealand versus US dollar, but heading into resistance areas for each of those currency pairs. We'll see if the momentum can continue, the dollar selling continue, and we get a further break to the upside in those pairs. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.